Let's also welcome Mr. Rudramurthy from Vashna.
And on top of all this market continue going up, sectors and stocks, then yes, this is the market for away from defense, but I will be buying only two stocks there, that was BEL and HAL. I said it should.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action on the D Street, the trading setup as well as the market strategies you need to follow for the day. Let's also welcome Mr. Rudramurthy from Vashna Investments now joining in on the program with us. Hi Rudra, very warm welcome to you. Good morning. Help us understand with your fresh take on the markets right on the back of geopolitical tensions, rising crude oil prices again coming in as overhang.
Sakshi, very good morning and thanks for having me in the show. See, last time when I spoke with you, I was definitely cautiously bullish, and yes, my stance of cautiously bullishness will continue. Now, I will tell you why. There are too many events coming all at once. At one end, we have crude oil prices now clearly above $76 per barrel, which is an important technical level. So till crude oil remains above $76 per barrel, I am talking about Brent crude, this market is still not out of the woods. No doubt technically for very short term, yes, market is showing lot of resilience. But my question is, for how long can it last? So you cannot have a situation where you have war at one end, you have Brent crude going up, you have dollar going up and rupee. That cannot happen. But for me, yes, we are definitely resilient compared to other markets. And yes, you have to be very sector specific and stock specific in this market to make money. And if you are a retail crowd, what I would suggest you is stay away, take some holiday, spend time with family, visit strong and powerful temples, read a lot of things in this time where you have to preserve your money and not to make money, and try to do that, you will only lose much. So these are times where you have to spend time on your family, on your learning, on visiting temples or wherever you get that higher level of consciousness. So for me, this is definitely a tough market. Retail has to stay away. If you are good in picking sectors and stocks, then yes, this is the market for you to be there, or else better to avoid.
Okay, got that. Let me also take Rudra's view here. Rudra, I remember last time around when we were discussing, you were saying that you would now stay away from defense. How are you looking at the defense story at this point in time? Do you think with these rising geopolitical tensions globally, is there still a case to look at defense afresh, or the valuations don't match up?
Sakshi, I was very clear, I will stay away from defense, but I will be buying only two stocks there, that was BEL and HAL. I said it should be in everyone's portfolio without fail. But yes, if you look at the shipping building stocks like your Masgav Dock or GRSC, they are all very, very highly valued. See, in fact, they are discounting earnings of 2-3 years ahead right now. And for me, having no margin of safety and investing for a shorter period of time into them was not advisable. But for sure, BEL and HAL, even at current market price, I advocate a buy, and I was buying it even last week, and I was advocating a buy on both BEL and HAL. But especially if you see the shipping stocks, and even for that matter, specifically if you see Masgav Dock, so all these are so richly valued, and they're discounting 2-3 years of earnings ahead. So for me, that was a concern. I'm not saying they're bad stocks, but they are great companies, but at greater valuation. So for me, unless you have a 5-year kind of a time horizon, I may not pick any of these shipbuilding companies, but for sure, even at current market price, I will be a buyer in HAL. I am saying HAL will be your next Indigo kind of a stock. It will be the next Bajaj Finance kind of a stock, and you should hold HAL in your portfolio. I won't be surprised to see 8,000 to 10,000 to come on HAL in next 1 year. That's a return of 50-60% in a frontline stock. And similarly, if you see BEL at current market price of around 410, in fact, I was advocating a buy at 380, 390 zones onwards very recently. Even at 410, 415 right now, if you are buying BEL, yes, stock can give 20-30% kind of a return in next 1 year. So my target is around 500 to 600 on BEL, and HAL can go up to 8,000, and both are F&O stocks. Definitely one can take a long position and roll over it for a longer period.
Okay, so that's the defense story and how both of our guests are really looking at it. Rudra, if I have to ask you on the healthcare space, how would you look at it? Where do you find the best opportunities? Is it in the hospital space? Is it in the frontline pharma space or diagnostics? What is your choice of space to retail investors?
See, for me, the frontline pharma is much better if you have to pick up stocks from this particular broad sector. So for me, I've always advocated Laurus Lab as one of these stocks to buy and keep it in your portfolio. In fact, people who want momentum, yes, valuation is very expensive, but still worth having that stock in your portfolio is Divi's Lab. Because if you see even the chart pattern, every time it keeps making the higher top, higher bottom formation, stock is in a clear uptrend, and any dip because of overall market correction, if you get, definitely you have to have Divi's Lab in your portfolio. Laurus Lab is a stock which can go towards that 4-digit mark of 1,000. So even from current market price of 650, there's an upside of 30-35%. Even if it can give that move in next 1 year, that is definitely a worth stock to have in your portfolio. So for me, Divi's Lab, Laurus Lab, these are stocks to own. In fact, Glenmark also, if you see, the earnings last quarter was really good. Technically, the stock has given a clear breakout, and for me, Glenmark is a stock which you can definitely have in your portfolio. Stock can head towards the 2,000 mark. So Laurus Lab and Glenmark will be my top pick based on valuation. But if you want to pick a stock based on momentum and chart pattern, yes, for me, Divi's Lab will stand out. So these three stocks I will advocate from this space, namely Divi's Lab for momentum, and for valuation and to have in your portfolio kind of a stock, you can look at Laurus as well as Glenmark.
Okay. Rudra, if you could look at the first 15 minutes of the candle for our viewers, assess it and help us understand, is this going to be, on the downside? Today again, do we have to be prepared for further cuts from here on, or will this be probably the dip that will be bought?
Sakshi, a very tough question right now for me to answer. The best way to do is just to stay away from market and wait for clarity to come. Even having no trade is also a trade, and cash is king. For me, these are times where you have to preserve your capital. For me, there is no clarity in terms of trend, and fundamentally also look at the news flow and developments happening around. Number one, today Accenture came out with that result as well as their guidance. For me, Accenture's share should have gone up, but the stock was down 6% in terms of growth estimates being higher, in terms of numbers being great, but their order book was a big question mark. It was below expectation. So for me, IT stocks have already taken it on the chin based on what happened to Accenture, and IT definitely on chart was showing some signs of recovery, and now I have to wait out and see how results will come from our IT stocks. But there also you have to be very stock specific. I will be very keen in IT as a sector. Look at stocks like Tech Mahindra, look at stocks like Coforge, Persistent System, which I have constantly recommended in your show. And for me, yes, Persistent, Coforge and Tech Mahindra are the best stocks in IT if you want to stay with IT. I thought IT is emerging as a good sector where you had definitely margin of safety, valuations are definitely attractive at current market price in general, but you have to be very stock specific. And for me, I want to wait out and see what will happen from our IT companies like TCS, Infosys, how will be the results from these bellwether IT company. And if you see overall market, yes, very important point, look at what was Friday's low on Nifty. I'm giving you even the reasons behind my analysis. Nifty on Friday gave that big move, and the low on Nifty spot was 24,783. So mark that number, 24,783 on Nifty spot. If we trade today below 24,783, that is definitely not a good sign. So I'll be very closely watching the developments in Iran, Israel. I'll be closely watching. See what happened even news front, let me tell you. When Trump is requesting China to interfere and tell Iran not to close the Strait of Hormuz, that is not a good sign. Trump is requesting China to speak to Iran. If Trump was so powerful, for sure he is. I'm not disregarding his power, but why should he request China to interfere? Can he not take it on the horn with Iran? He is asking China to come and ask Iran not to block the Strait of Hormuz, and yet they are yet to block that. But Parliament has already given a green signal to them, and it's now the turn of the leader to take a call. But if that happens, and look at where crude oil prices are right now, definitely above $76 per barrel, which I mentioned right at the beginning. So for me, these are not good signs. And for me, at one end, Accenture, where the results are very important, and we are heading towards July month when the result season will start in. But for me, results are important, Brent crude price is important, dollar rupee is important, and the news flows around which is happening tells to me to be optimistic. But you have to be very cautious, you have to be very sector specific, stock specific. I'll tell you, be in only defense stocks like BEL, HAL, be in only IT stocks like Persistent, Coforge and Tech Mahindra, and be in pharma stocks, yes, where I mentioned names such as Laurus Lab, Divi's Lab, and I even mentioned about Glenmark. So you have to be in defensive right now. This is not a place to aggressively buy the market. Let all these news flow subside. Let me get clarity on all these news flow, and then one can take big position. When war is happening, and that too, you have so much of destruction happening in Iran and Israel. Both the sides are not giving up. There is no de-escalation happening whatsoever. Ceasefire is not happening. US is now joining. Now they are asking Russia, China to come in between and do all these de-escalations and the ceasefire, where US has already started participating in the war. These are not definitely good signs for me, Sakshi.
Okay, Rudra, we'll also look at some of the stocks now to take your view there. Let me also just pull up for all our viewers some stocks that they can also look at right now. There's only some green in the defense stocks in the markets. BL, HAL are leading that rally. You're also looking at names like Oil India, ONGC from the oil space. There is from the PSU basket some move as far as NHPC, GAIL, IRFC is concerned. You also have some FMCG names like HUL up. Trent is higher from the retail basket. You're also looking at telecom stock Bharti Airtel, that's in focus right now from the large cap space as well. Let me also just look at any other stocks that we should be marking for all our viewers. Apollo Microsystems, remember this stock really rallied sharply, gave multifold returns to investors in the previous setup in the defense move, 6% higher for this one again. So that's again in focus. Defense names are back. You can see RA Drugs as a small cap pharma name that is up in trade right now. Those are the kind of names that are hovering higher. Let me discuss with you, Rudra, your suggestion on the FMCG stocks. Are you looking at them or completely overseeing them?
No, Sakshi, I'm definitely not looking at FMCG as a sector, and I'm making it a very, very clear point here. And please make note of these levels which I'm talking. On Nifty, the Friday low is 24,780. I'm referring to spot level. If we break and close, let me again repeat, if we break and close below 24,750, I will say bulls have to get out of your long positions and your trading longs. I'm not talking to investors who are having a longer time frame, who understand company well, sector well. You don't have to panic, but I'm talking for short-term traders. Nifty closing below 24,750 on Nifty spot is not a good sign, and that will be the first sign of alarm bell telling me to step aside from this market, from the long positions what you have, especially for all short-term traders. And similarly for Bank Nifty traders, I'm giving you the level. On Bank Nifty, the level is 55,500. Both these levels are below Friday's low, and if we break and close below this level, that confirms to me that yes, positionally market has become weak, and I will tell that only when Bank Nifty closes below 55,500, currently trading at around 55,950 on spot, and once we trade below 55,500 and Nifty below 24,750, I say bulls have to step aside from your long position. And those of you who want to buy this market, and I am also bullish for medium to longer time frame, no doubt for very short term, because of crude oil going up, because of Iran-Israel issues, and because of even dollar spiking against rupee, I am not very positive for very short term. And if you want to still be a buyer in this market, pick up stocks from defense, pick up stocks from, let us say, pharma, and pick up stocks from IT. And from these three sectors, that is pharma, IT and defense, I am very particular on the stock names which I have already given to you, that is BEL and HL from defense, from pharma, Laurus Lab, Glenmark, as well as I spoke about Divi's Lab. And also when it comes to defense and pharma, I have spoken. Also when it comes to the other sector, that is defense, I said about pharma. And also for me, if you want to pick up specifically some stocks, keeping aside the sector, but where you have valuation comfort, look at Indus Tower. For me, this stock can do very, very good irrespective of market. Yes, Indus Tower at 400, 405 is a great buy. So you have to be very stock specific. Look at even Indigo. I know crude oil prices going up is not good for Indigo, but if you get Indigo at around 5,200, I will be a buyer in Indigo. Indus Tower looks good. Bharti Airtel looks good. So you have to be very stock specific in this market, and I am very cautious on this market for short term, medium to longer time frame. Yes, I am bullish.
Okay, yes, and Indigo is something that you've consistently marked out for all our viewers, Rudra, as one of your topmost choice of stocks when it comes to long-term wealth creation. You have repeatedly talked about that, and of course we will continue to put that out for all our viewers to really watch out for as well. Now let me just talk to you about some of the other key sectors and stocks that we can probably look at. How about the capital markets related stories? How are you looking at stocks like BSE, CAMS, CDSL, KFinTech? On BSE today there is another Goldman Sachs report with a neutral rating and a target price of 24.30. Remember, we have been constantly talking about how the expiry decision has been something that has been creating some knee-jerk reactions on the stock. Now finally the decision has been taken there. There will be some clarity. What after that on BSE, and how would you look at rest of the other stocks as well?
Sakshi, I'll be crystal clear on my view. I might go wrong on my view, but I don't want to give a two-sided opinion. I'll be very clear. When markets are not doing good for short term, you can't expect capital market related stocks to do good overall. Second most important point, no doubt these are great companies, but for me they are not great stocks right now. Yes, BSE return has been over 100% in last 3 months if I am not wrong, and it is an F&O stock. We are not talking about a non-F&O stock. If an F&O stock has gone up 100% in 3 months period, some time-wise consolidation can happen here. Undoubtedly for me they are great companies. I am not talking about the company's performance. I am not against these stocks, but I am against their valuation, I am against their move which we have already seen, and I am against buying them right now. If you have bought it already, yes, you might hold on, but if I was in a place where I had bought it earlier, I will definitely book some profits here, and I will go for companies where I have more valuation comfort. I will switch to sectors where for me at current market price, it gives me a decent margin of safety. For me, IT is one sector where I have margin of safety. Pharma is another sector where I have margin of safety. And yes, very specific, stock specific, you have some safety even in defense as a counter. For me right now, even railways are emerging as a good sector to look into. Might be after the recent correction what we have seen in Titagar Wagon, or even if you see Jupiter, or even if you see other stocks like your IRCTC, RVNL, yes, they are offering some amount of valuation comfort, and I'll use these dips to buy, but you have to be very sector specific right now. Capital market fresh buying is definitely avoid. If you have them, book some profits for sure. or if you want to hold them, yes, hold with tight stop losses if you are a short term trader, but I will definitely not advocate a fresh buy into any of these stocks. No doubt they are great companies, but they are not great stocks to me at current market price, keeping in mind valuation as well as margin of safety.
Okay, fair point. I hope this has also helped you out in understanding a clear strategy there. How would you look at, some of the other stocks that are on the brokerage houses radar? Like, I'll talk about the cables and the wires segment. We talked about FMCG, but this is FMEG, the electrical goods that are fast moving. There was a time when Polycab used to be discussed almost on an everyday basis. Rudra, you would remember last year when the entire space was on fire. You could see Havel, Polycab, a lot of the other names also buzzing, IPOs coming in the same aspect as well. The stock has tested volatility, come back, to the all-time high levels as well. Now, Jefferies has come out with a report. It says that it has a buy call, a target price of 7,150 now on the company as well. They also believe that since March of 2025, the stock is already up 25%. It's trading at 34 times FY26. It's earnings as well, just above the 4% of 5-year average. How would you really look at Polycab right now, and what happens to the other cables and wire segment? Do they still interest you?
Sakshi, very, very clear view again. I will definitely tell yes, Polycab is a great company, great stock. Buy it at any price, have it in your portfolio, you will make money. Irrespective of the sector, these are great companies, great stocks. Buy it at any price, you will make still money over a period of time. And one such stock is Polycab. Just because of this great question from you, Sakshi, I am now naming 5 stocks which fall in the same category but from different sectors. Look at Bharti Airtel. Again, for me, this is a great stock, great company. Buy it at any price, have it in your portfolio. Look at similarly Indigo, which I have always told you. Yes, now because crude oil is going up, Indigo will definitely come down, and levels closer to that 5,000, 5,200 will be a great level to buy if you get Indigo there. Wait out and see if you can find out these stocks at those great prices. Look at again Bajaj Finance. Stock at current market price is still a good buy. The next Bajaj Finance is Bajaj Finance. But if you get any dip in this counter because of overall market correction, yes, Bajaj Finance closer to that levels of around 800, 850, it will be a great buy now. So after all corporate announcement, stock is now nowhere at 9,000, 10,000 level. Because of those corporate announcements, the stock is back to that 900 level. But yes, 800, 850 will be a great level to buy. So for me, Bharti Airtel, Polycab, which you mentioned, Sakshi, Indigo, HAL and Bajaj Finance. These 5 stocks, have it in your portfolio and you will make money over a period of time. You can buy them and sleep well in the night without any trouble. No need to see what is happening in Iran, because these are great companies and great stocks which will give you return over a period of time. So again, repeating the 5 names: Bharti Airtel, Polycab, Indigo, HAL, Bajaj Finance. These are stocks to own in your portfolio, and over a period of time you will definitely make money irrespective of what is happening around the world.
Okay, got that. Let's also focus on, we'll definitely look at these 5 stocks, pull it out in a chunk for all our viewers to really see where Rudra is really most bullish on. Let me talk about the new age space as well. And within that, in fact, I would want to talk about again, our favorite stocks to talk, that are Zomato and Swiggy, that we always keep discussing at each level for you to really assess, since there is a large retail interest. A lot of young investors really look at these new age stories because they relate with these companies on an everyday basis. They deal with such companies, but it's important to track and understand fundamentals and technicals both of such companies and find out whether they are great buys at each level. How would you look at Zomato and Swiggy at this point in time? Are these accumulation zones? Are you actually not paying that much attention right now after having initially put in money? What would you do now?
Very, very clear answer and one line answer, Sakshi. If you want to be in this sector, new age sector, only 2 stocks which I will keep recommending again and again. One will be definitely Eternal or Zomato, and second stock will be Paytm. So Swiggy, yes, Off late, you have been seeing good move on the chart. It has given a short-term breakout also above the 375 zone and staying above that. Yes, Swiggy also will be a good stock to have, but I will still prefer Zomato over Swiggy, and I will have Paytm for sure if I have to be in this sector. So two stocks, or if you want to add a third one, then I will add Swiggy as the third stock. One will be Paytm, two will be Zomato or Eternal, and three will be Swiggy. So these are the only three stocks from this sector which you can definitely buy and have it in your portfolio.
Okay, got that. Now, Rudra, another one that I wanted to discuss with you is as far as Ola Electric is concerned. Now, we do see some equity getting exchanged hands, and that's why the stock is further lower. Now, stock is trading at around 44 odd levels. The stock is sharply lower from its IPO mark. From its all-time highs, it's almost dropped 40-50%. For those holding since IPO, believing in its long-term story, what would you say? Again, a story that a lot of young investors have been looking at.
Definitely an avoid rating, definitely no buying even here after that 40-50% kind of a fall, and I will avoid Ola Electric. If you have it in your portfolio, daily chant 101 times Om Namah Shivaya and only God can save you. I don't have any other comment on Ola, but these are stocks which are wealth destroyers not to have in your portfolio. If you say I have a very long time of horizon, I'm sure when people bought Ola, they never had that long time horizon of 5 year, 10 year, 20 year. Now they have no other choice seeing the current market price to have the long term horizon, because you have no other option but to have that 5 to 10 year kind of a horizon from now on. I want to make money in stock market not out of a specific stock only. So if this is not a stock which you have to own, I will buy Ola Electric later. Why to waste time on these type of stocks? Capital is not available in unlimited quantities and abundance to have these stocks in your portfolio and waste the opportunity cost. I will definitely avoid these kind of stocks even for very longer time horizon. Let there be a revival in company, let there be a change in numbers, then I can get back to these companies if I really want. Why I have to pick up only these stocks when you have plenty other opportunities elsewhere?
Absolutely. Okay. So I hope this has also helped you out in understanding how should you be looking at this stock there. What about the banks, NBFCs, small finance banks? There are some norms that are changing now. How are you looking at this space and what's your fresh approach here? You did talk about Bajaj Finance as your all-time favorite stock, which you have repeatedly talked about as the large NBFC stock that must be in everybody's core portfolio. Small finance banks are again in focus because of the new norms of PSL that are in focus again. How would you look at this basket too?
Yes, Sakshi, whatever the reduction in priority sector lending has happened for the small finance bank fundamentally from RBI, that's a great news, because the NPS will reduce for them and you don't have to allocate more funds into that particular sector of lending. So for me, that's a positive news, no doubt. And yes, you can pick up stocks, whether it is your small finance banks, you want to pick up Ujjivan small finance bank, you have many Utkarsh, you have many names there, but somehow, except for this news flow which is positive, I don't have such a great view on this as a particular sector to be into. And yes, these are stocks which some of them are owning. One of the stocks which I was very bullish from those 650, 700 levels was AU Bank, and AU Bank has already done enough. And if you get any dip there, yes, that will be my first choice to buy. If you want to pick up this as a particular sector where you want to be in this sector, then yes, my top pick will be AU Bank. And AU Small Finance Bank has already given a big move from those levels of around 540. Stock is now closer to that 800. So the move has been very fast and quick in a very short period of time. Might be now any dips to levels closer to that 750 mark, I will look at entering into AU Bank if you have to be specifically into this sector only. Or else, for me, this is one more sector where you have to have a choice on the stocks what you want to buy.
Okay. Let me bring in some more sectors for you. One more theme that we used to always discuss in the recent run-up was the EMS space, especially Dixon Technologies and Keynes. They used to be our go-to names to discuss, EMS Limited, Amber. How are you looking at Dixon and Keynes particularly? How are you looking at them at these prices, and what is the outlook?
Sakshi, this is another stock which you have to have in your portfolio, and they keep becoming more and more expensive on valuation.
Yeah.
So for me, whether it is Dixon, whether it is Bajaj Finance, Indigo, HAL, Polycab, Bharti Airtel, they are all always expensive stock for a reason. The reason why they are expensive is because they have clarity and they have earnings which is very clear for the future what they are getting. Wherever you have clarity in terms of the future earning, those stocks will always be expensive, and that is the reason why these stocks are always expensive, and they will remain expensive for a long period of time. So for me, Dixon is a buy at current market price, and on dips to levels closer to that 13,000 mark, keep accumulating Dixon into your portfolio, you will make money. So another stock which you referred to was
Dixon and
CAMS.
Keynes Technology, Kaynes, Keynes Technology.
Okay. Yeah. So Keynes is another stock which is only into the equity market. Yes, you don't have it in F&O, but yes, Keynes Technology also at current market price and on dips to levels closer to that 5,400 mark. So kindly make note 5,400 on Keynes, and on Dixon levels closer to that 13,000 mark will offer a great buying opportunity. Yes, buy it at current market price because I'm not sure whether you get those levels, but accumulate it over a period of time. Don't buy everything at the current market price. Dixon on dips to levels closer to that 13,000 mark, and also as I mentioned now, Keynes also towards the dips to levels closer to that 5,300 mark will be a great buying opportunity, and you have to have them in your portfolio.
Okay, got that. The first half an hour, 40 minutes are now nearly done for the markets. Rudra, how are you assessing the situation now? 250 points lower for the markets, 24,858. There's a near 800 point slump on the Sensex as well. Is it now looking more tough to see a buying on dip from this level?
Sakshi, I am very clear in my views, and I also mentioned it last week. I am mentioning it even now. Rudra, who is generally a very bullish guy on markets, is turning cautious on this market, and I might be a bit early for that. And I have reasons both fundamentally and technically. But yes, I am not gung ho on this market for short term to buy. In fact, there are a lot of stocks. If you are a good trader who understands risk reward, who understands risk management well, you can even look at shorting opportunities in this market for a very short term, which will also act as a hedge against your long term portfolio. There are some stocks which I cannot exit from my portfolio because they are for long term. Yes, for that, very short term hedge can be taken by shorting this market, and there are a lot of weak counters where we can focus on that. But seeing what has happened already in the last 45 minutes time frame for today, I am definitely continuing to remain cautious. Mark that level of 24,780. If Nifty closes below 24,780, and similarly I told on Bank Nifty the level is 55,500. If Bank Nifty closes below 55,500 and Nifty closes below 24,780 for short term, definitely this market will be weak. And if you ask me above what level you will turn extra bullish on market, yes, for me Nifty has to cross 25,200. Till we cross 25,200, we are still not out of the woods. Let market cross the 25,200 and let crude oil prices come below $75 per barrel. Very simple analysis I am giving. Watch crude oil prices, Brent crude spot level. If Brent crude spot level comes below $75, Nifty goes above 25,200, then I will say yes, all the negativity is gone and dusted, you can go long. But I'm not saying stay away completely from market. What I'm saying is if you are that bullish fellow who wants to buy this market on every dip, be very specific in your sector and stock selection. Be in defense, be in stocks like BEL and HAL, be in pharma, be in stocks like Laurus Lab, Glenmark and Divi's Lab, which I mentioned. And if you have to be stock specific more, Look at stocks like Indus Tower, look at stocks like Bajaj Finance, Bharti Airtel, Indigo, Polycab. All these are stocks which you can have in your portfolio, and you have to be very stock specific and sector specific till this cautious stand in market is taken off. Let's say tomorrow we have new news flows to come and we see crude oil prices falling down, we see changes in geopolitical tensions which are there, we see, let us say, de-escalation and ceasefire happening, then I will even change my view accordingly. But then till these changes happen in market, in reality, I will remain very cautious in general in this market.
Okay, got that. And there on your screens, viewers, you can actually see the listing of Aditya Birla Lifestyle Brands, and it has listed on a positive note, a percent higher. You can see the levels 24,852 for the Nifty and 174 levels, as far as the Aditya Birla Lifestyle brand is concerned. You can see a positive listing on that one. Remember, Aditya Birla Lifestyle brands have been demerged into a new company from the Aditya Birla Fashion and Retail, and now the listing has happened for Aditya Birla Lifestyle brands. Now this will now trade in the T2T segment, that is trade for trade segment, for the next 10 days after the listing. And remember, for all those investors of Aditya Birla Fashion and Retail who held the stock on the record date in the month of May, on May 22nd, you tend to gain one stock each for each one held for Aditya Birla Fashion Retail in your portfolios with this listing that has come in today as well. Now, this is as per what has happened is that the trading members of the exchange have effected and have told that from now onwards, Aditya Birla Lifestyle will be a listed entity. It is a demerged entity from Aditya Birla Fashion Retail, and the script will now be available for a T for T, that is trade for trade segment, for next 10 days. It's a special segment where all the transactions are actually settled through delivery. In this T2T segment, as per the rule, no intraday trading or no BTST trading is allowed for the next 10 days. So remember that in case you're looking at this stock as well. So now, of course, remember, Aditya Birla Fashion Retail had said that the board had allotted 122 crore shares to the shareholders of the resulting company of the demerged entity based on the eligibility on the record date. So for all those 122 crore shares that have been allocated to eligible shareholders, those who held the stock of Aditya Birla Fashion and Retail in their portfolio on May 22nd, you tend to gain this stock as part of this demerger and this separate listing that has happened. The shares were demerged and issued to the investors, the eligible shareholders, on a 1:1 basis, which means if you had one stock of Aditya Birla Fashion Retail in your portfolio as on May 22nd, you will now get one share of Aditya Birla Lifestyle shares as for one share held. So remember that as well is what you're getting to understand. The face value of each one share of Aditya Birla Lifestyle brands is 10 rupees. That's something that you should be looking at. So that's where the live visuals are coming in. Let's quickly go across to Rudra to understand after this live listing what his view is on Aditya Birla Fashion and Retail, the group as a whole. Of course, the newly listed entity will be only available for T2T, not intraday trades and BTSC right now.
See, specifically, Sakshi, ABFRL is a stock which has just fallen like a 9-pin and a pack of card. And if you see the price level, it was at around that 97, 98, and from there non-stop fall has happened towards this 70, 73 mark, and that correction has been a correction of 25% on a stock which was in F&O. And for me, that is not a good sign. Look at ABFRL currently. Yes, because of this news, whatever you have on the listing front of one of its group companies, yes, you have some amount of respite. But for me, it's a clear avoid. Even at current market price, ABFRL at 73, 74, I will not be a buyer. Let the trend change or reverse, then let me have a relook into this counter if I have to. And I will definitely avoid this sector or I will avoid this specific stock. And I will also avoid this group of companies which are there. as of now. So for me, avoid marking or rating on all these group of stocks, and I don't track them closely also, and definitely on charts right now. For me, ABFRL doesn't show any signs of recovery yet, and let me see some amount of bottom formation. Let it hold that support of 70 and then make a move towards that 80-85 mark. Then I can have a relook towards that. But at current market price, why ABFRL when you have stocks like Trent? I will still go and buy Trent instead of ABFRL. And why do I have to put my money into these wealth destroyers? Rather go and put your money into Trent, which will still be a wealth creator. Even in negative market, bad market like today, see how strong the stock is holding. So to my previous list of stocks which I had, those great companies, no doubt valuation is expensive. Look into Trent as another stock to add into that portfolio of Bharti Airtel, Polycab, Indigo, HAL, Bajaj Finance. To that list, please even add a Trent. This is another stock which you can buy at any price and hold on to your portfolio. Over a period of time, you will make money. At least the downsides in these stocks are limited. No doubt valuation is the only concern because of clarity of earnings. These stocks are always available at a higher price and higher valuation, but still you will not lose money. You have to only spend some more time in these stocks where the downside will be limited because of their great visibility of earnings. So for me, Trent is a definite better option compared to the ABFRL and other stocks which are there in the same sector.
Okay, got that. Well, Rudra, we will leave you on that note. Thank you so much for being with us on the show and helping all our viewers understand the key strategies that you expect to be, exerted as far as the markets are concerned. Your cautious optimism is something that we will now remember and keep in mind at this point in time as the new world order is kind of dealing with these fresh fears on geopolitical tensions, and we hope that things sort out soon so that things can be back on track and the sentiments are also seen improving. Thank you so much, Rudra, for being with us.